Hey everybody, Smart Silver Stacker here. There's a document that has been making its way around social media lately, which, when you read it, is obviously of significant interest to the gold and silver stacking community. It's a statement of purpose, and it's been posted to the Idaho legislature's website. Now, we're going to talk about what this document means, but first, let's just go ahead and read it. In the last 18 years, the money supply has grown by 200%. In other words, it has tripled. A tripling of the money supply will eventually accelerate the rate of inflation. By adding physical gold and silver to Idaho Code 67 1210, the state treasurer will be permitted to hold some portion of state funds in physical gold and silver to help insure state assets against the risks of inflation and financial turmoil and or to achieve capital gains as measured in Federal Reserve notes. The new authority will be confined to holding gold and silver directly and in a manner that does not assume the counterparty risks involved with other current state holdings, such as corporate bonds, treasury bills, and other debt instruments. This measure does not empower the state treasurer to invest in paper instruments, futures contracts, or other gold and silver derivatives. The authority is confined to physical gold and silver, directly owned by the state and stored in a secure depository. Fiscal note: this will have no direct impact on the general fund as it grants a permission for the treasurer to invest state idle monies in precious metals. There may be some increase to the general fund as investments may lead to larger returns and serve as a stronger hedge against inflation. There will be no fiscal impact on local entities because this is strictly limited to only the state treasurer. Okay, so some pretty interesting stuff there. And it appears that this statement of purpose is related to a bill that has been proposed in the Idaho legislature. Today's video is brought to us by SD Bullion, where you can now get your first purchase of gold or silver at spot. You can find all the details about that at sdbullion.com/new. And now let's take a look at this House Bill 180, which, according to this site, Fast Democracy, which tracks legislation, was introduced back on February 22nd. Now, this does seem awfully similar, in fact, almost identical to this House Bill 522, which was introduced in the Idaho legislature in February of last year, and which appears to have passed the Idaho House on February 17th of 2022, but then never got any further. Again, this is all according to this site, Fast Democracy. I am by no means an expert on the legislative process, let alone the Idaho legislative process, so I'm not really sure what happened to this bill the last time around. I mean, maybe it just ended up in legislative limbo or something. And I wasn't really able to find any media coverage of this, so if you are watching and you have some idea of what happened to that House Bill 522 last year, leave a comment down below to let all of us know. But it does appear that the legislature is taking another crack at this now, and maybe this law will be enacted this time around. It looks like last year, Bill 522 was passed pretty overwhelmingly by the Idaho House, with 55 votes in favor, 14 against, and 1 abstaining. And it probably comes as no surprise to you that I think that this sounds like a great law, a great piece of legislation for a state, and a very smart one for them financially, because it acknowledges the persistent inflation problem that we're experiencing that is likely to continue to get much worse. And stacking physical metals, I think that that is the best safeguard against the inflation threat. And let's say that this bill passes this time around. What's it going to mean for gold and silver, for the precious metals? I mean, how big is the Idaho General Fund anyway? Well, according to the State of Idaho 2022 Legislative Session General Fund Budget Update, the fiscal year 2023 estimated ending balance of the general fund will be somewhere between $164 million and $235 million. Now, I don't know what portion of that fund would actually go into gold and silver in the event that this legislation is passed, but you can see that we're not talking about chump change here. And I think it's important to note that this bill does talk about not just gold, but also silver bullion as a potential investment. And to the extent that money from that general fund goes into physical silver and not gold, that could make a fairly significant impact on the market, because keep in mind, global silver mining production in 2022 was only 843 million ounces. At today's spot price of around 21 bucks, that is about $17.7 billion worth. So when there's the potential for state governments to begin stacking millions or maybe tens of millions or possibly even hundreds of millions of dollars worth of bullion, that could add up to a pretty good chunk of the metal that is available for investment. However, I don't think it's too likely that a huge portion of the general fund is going to be put into physical silver, even if the bill is passed. So, this law would be a net positive for the bullion market, but probably not a real game changer. The more important takeaway here, if you ask me, is that more and more market participants are becoming aware of the persistent nature of this inflation problem that we're facing. And as a result, the de-dollarization process, it's becoming something of a self-fulfilling prophecy. I mean, when you've got US state governments de-dollarizing, you know the problem is getting serious. And make no mistake, stacking gold and silver is de-dollarizing because basically what you're doing is you're selling your US dollars in exchange for these hard assets. And while one state government in Idaho moving into gold and silver might not be enough to rock the precious metals boat too much, there's 49 other states, and combined they've got a lot of fiat currency. And if more states jump on board this physical bullion stacking train, it could become a major driver of price action in the metals markets. Now, I do want to shift gears here just a little bit and talk about some de-dollarization that is occurring on the other side of the world, just to highlight what a global phenomenon this is really becoming. It seems like almost every day we get some new story of countries dumping the US dollar in some capacity, and the most recent one is that on Wednesday, the Central Bank of Iraq just announced they will be dumping the dollar in favor of the yuan to pay for their imports from China. They're going to begin converting US dollar balances into yuan, and then they'll be paying directly in the Chinese currency for those imports. And it's important to note here that previously this trade was being conducted exclusively in US dollars. Now, one important caveat to this story is that this is not going to affect Iraqi oil exports to China just yet. Now, this might be a wise move on the part of the Iraqis, who, by the way, are OPEC's second largest producer of crude oil after Saudi Arabia. Because, we all know what happened to Saddam when he tried to de-dollarize oil sales, so they might just not be willing to go that far at the moment. Although I will say that the appetite for some kind of U.S. military intervention in the Middle East to defend the petrodollar system is probably a heck of a lot lower than it was 20 years ago, as the military-industrial complex kind of has its hands full at the moment, keeping Ukraine supplied with weapons. And also, the credibility of this implicit threat is not quite what it once was, following the disastrous U.S. withdrawal from Afghanistan just 2 years ago. And that's why I think it's only a matter of time before Iraq begins selling its oil to China, who happen to be their biggest customer, in yuan. From a purely economic perspective, it just kind of makes more sense. China has these manufactured goods, Iraq has oil, they want to trade. Why does the dollar have to come into this in the first place? Well, one reason is that there's this sort of network effect of sorts, and when everybody globally is on more or less friendly terms, it's actually pretty helpful and convenient to just have one common currency like the dollar to conduct international trade in. But in 2023, with the global financial system fracturing and nations like China increasingly wary of the risks of holding US dollars and dollar-denominated assets like US treasuries, we are closer than ever to seeing countries such as Iraq and China moving to bilateral trade conducted exclusively in their local currencies. And that includes payments for energy. And I think it's only a matter of time, folks. Remember, this is exactly what Xi Jinping was lobbying the leaders of Gulf countries for at the China Gulf Summit just this past December that was held in Saudi Arabia. So, we've been warned. And I don't think that most Americans have any clue what the consequences of this move are going to be when it actually occurs. For 50 plus years, any country around the world that wanted to buy oil had to hold US dollars. And now, if all of a sudden they can begin paying in local currencies, well, all of those dollars that they've been holding, they're going to come flooding back into the US. And I don't think I need to spell it out for you what that's going to mean for domestic inflation that is already near record highs. So the signs are all around us. We have been warned. The writing is on the wall. Pick your metaphor here. But clearly, the time is approaching when hard assets like physical gold and silver will be the safe haven, the lifeboat from the inflationary storm that seems more and more inevitable by the day. We're simultaneously facing the end of the petrodollar system and also one of the biggest debt bubbles in human history. As that Idaho bill points out, the money supply has grown out of control. We also have spending at the federal level continuing to grow unabated. We're on the verge of a global conflict, which is likely to wind up with an enormous price tag. And all of this while interest rates are rising and debt delinquencies are growing in every sector of the economy. And that is why Idaho wants to stack physical gold and silver. That's why central banks around the world are acquiring gold bullion at the fastest pace on record. And it's really why I'm stacking too. So leave me a comment down below to let me know what you think about these most recent developments. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.